Do foreign Amazon FBA sellers owe U.S. income tax?
Hello everyone, my name is Titus from Bongart. For over 20 years I've been a partner at Ernst & Young and for many years a board member with the German Chamber of Commerce, advising global companies on international trade and tax. Today I want to tackle a critical question buzzing in the e-commerce community. If you are a foreign seller using Amazon FBA, do you have to file US income tax? Let's clear up the confusion. Let's start with the single most important fact. As of August 2025, there is no explicit rule from the IRS or any other US government source stating that using the FBA model automatically means you are engaged in a US trade or business or USDB. So where is this discussion coming from? It originates from analysis by tax professionals. They are looking at existing, long-standing US tax principles and applying them to modern e-commerce. These are experts' interpretations, not new official laws. We need to understand this concept. In the eyes of the IRS, you are operating a US trade or business if your business activities in the United States are considerable, continuous and regular. If you meet that standard, the income connected to that business is called effective connected income or ECI. And that income is subject to the US tax. The IRS looks at the whole picture. There is no single factor that triggers this. So why do experts believe FBA sellers are at risk? It comes down to two core ideas in US tax law. First, the physical presence principle. Tax law cares deeply about where your business assets are. When you systematically store hundreds or even thousands of your products in Amazon's fulfillment centers across the United States, tax advisors view that inventory as your physical assets on US soil. This creates a strong argument for a physical presence. Second is the business activity principle. Think about what Amazon does for you. They aren't just your delivery service. On your behalf, they are warehousing your goods, picking and packing orders, handling shipping, and managing customer returns. These are substantial, regular, and crucial business activities happening within the US. The activities of agents like Amazon can be attributed to you as seller. When you combine the physical presence of your inventory with these continuous business activities, many tax professionals conclude that the FBA model is very likely to be considered as US trade or business. Alright, let's bring it all together. Here's what you need to remember. First and most importantly, the IRS has not issued an official automatic rule stating that using FBA equals a US tax obligation. That's the official stance as of now. However, this is the crucial part for your business. The professional consensus is that the risk is very real. Based on long-standing tax principles of physical presence and business activities, most experts believe the FBA model creates a significant connection to the US tax system. Finally, while this is a complex issue, we haven't seen a wave of public cases targeting foreign FBA sellers just yet. The global trend is undeniable. My goal today was to provide a professional and objective overview. In a world where tax authorities are increasingly focused on the digital economy, it's vital for sellers to be aware of these issues. As you plan your global operations, remember to factor in the potential cost of staying compliant. Thank you for your time as you navigate the complexities of international e-commerce. The team of WorldFirst and I wish you all tremendous success in your global sales.